Now, when we jump into the charts, we had a little bit of a plot twist because we've been edging down over the past 3 to 5 days, and then it started to happen. Tech earnings roll in, we have the bad news around banks, and overall the story seems to have been, does anything really matter if tech keeps smashing? Now, when we look at trading equities and stocks, S&P 500, the Nasdaq, whatever you're trying to trade, options, whatever, right? There's 3 levels we've been watching. I say it in every video. I've said it for the past 2 or 3 weeks. You're watching 3 levels. 13.1 on Nasdaq, 13.2, and then 12.95 here on the Nasdaq. Why are we watching these levels? Because these are the most important levels in the range that you've been trading. Now, to get bearish, to really want to enter plays, what do you have to happen, right? What has to happen for us to want to go short on Qs or wanting to go short on SPY? You got to get below these levels, 12.95, and we can see what's happening at this level. So we're going to talk about exactly where we're at. We have big earnings here in the after hours. Amazon, we're talking about that huge beat. And I'm going to tell you what I'm playing going into the end of this week and why I believe tomorrow as well, there may be a Trojan horse ready for us to knock us down. But of course, before we get into that, I have to ask you to do 2 things. Consider liking and subscribing every single day. As you can see here, I make videos for you to prepare you for the market. I gave you the fundamental and the technical viewpoint. I will say right now, there is a major disconnection between those two. But I try to be as transparent as possible, show you my trades throughout the day, win, lose, draw, and then give you the roadmap that I am using every single day. Now, if you would like to be with us, if you would like to talk with us all day long, the Discord link is down below on our website. Right now, we do have spots available, so check it out if you are interested. Now, I know what you're asking, is this a signal service? No, do not join this. I recommend don't join anything that is a signal service. The goal is to be around traders with a like-minded mentality. The goal is to have the education there, to have the community there, tell you what we're looking at with the market, trade setups, trade ideas, everything in between, giving you a visual on some of the ideas from today, right? We went long. I posted this even on Twitter today. I posted on Caterpillar. We posted SPY as well. Those are all the winners that we had today. Today, this is only trades we took. Even though I was having a bearish bias on the longer term from a fundamental viewpoint, the technicals based on the video that I gave you yesterday did not give us that entry, right? We had to hold below 4,100 on ES and 12.95 on Nasdaq to get bearish, but we just held those all day long and you ended up going crazy. I will also say, shout out Min Tran. This guy broke the record in Discord. He had a 120K day yesterday. Got to shout you out, but congratulations. But again, this is what we're trading, right? I mean, like, I don't know how else to be more transparent about it. But a lot of these trades too, it's not even that we are the ones mentioning it. It's also you guys. The goal is for us to help guide you along the way when it comes to finding trades in the technical viewpoint and the fundamentals for new traders. But let's get back into it. So when we dive in here, what are we looking at? Okay, what I'll say right now, are you necessarily having to push through highs right now? I would not say that. As we look, this is the daily time frame. So if you look back, going to March 30th, you're still technically in this range, right? Let's just get rid of this right here so you can see a little bit more clear. And we're actually going to minimize so I can just show you overall where you're at. I mean, just giving you a visual about that 13.3 back down to 12.95 roughly right there. Pinballing back and forth, back and forth, back and forth. We had a few holds below. You just couldn't get it. Now, what did I say yesterday? If you're looking to go short, in my opinion, the direction or what you were looking for was not tech. Why were we not looking to short tech? Because Microsoft beat, because Google beat. Netflix did not beat, but they had a good guidance. Tesla did not beat, but they really, honestly, if you look at their earnings, they don't really influence the market as much as these other names, right? Amazon just beat. It's like the list goes on all week. Meta beat yesterday. Like crazy, right? And so this just keeps happening. And I said yesterday, you're not going to be looking to short Qs or tech until we have bad earnings from tech. You got to have some bad earnings first. If you don't get those bad earnings, you're shorting strength. And it's just something you can't do yet. But there is a big thing to talk about and to be focused on. Because tomorrow, again, my opinion, what I'm looking at, you do have what I said, the Trojan horse, PCE data. Now today we had a little bit of a glimpse. You had PCE pricing, okay? This is something that's interesting, and it kind of gave you maybe a leading indicator into the last report. So I recommend caution going into tomorrow, but with Amazon's earnings, you look pretty good. PCE prices came out today, higher than expected. Going into the last reading that we had, it did come out lower than expected. It's not giving you the forecast. Sorry, it's just not going to give you it, but it was lower than expected, which came out with PCE, and PCE came out lower than expected as well. But a few things have shifted since the last PCE reading. Energy prices have gone up, right? So, and I will say, this is not I like CPI personally, but the Fed sides and says PCE is the most important data pool across the board. So these are things that you need to be looking at and just, keeping in the back of your mind. PCE data coming out tomorrow, core PCE specifically, 7:30 Central, an hour before market open. Okay. So you need to understand that this is investing.com. This is free. It gives you a calendar, everything that's happening on the market, today, fundamentally things that are important on the list, right? That's what you need to be looking at there. Okay. Now, Amazon, obviously in the after hours, you're at 118. You hit like highs of 122. You're moving great, right? This is just like the next stock on the list, right? It just continues to do it. Just every earnings has smashed. Giving you a quick visual. Let's just run down the list. Microsoft earnings, you were down at 275. Today you're at 305. Monster push, okay? $30 of upside. Next one, Meta. Yesterday, what happened? Closed at 209. Today, you closed the day at 239. Highs, 241, 242. You're looking incredible. The list keeps going on. Amazon, what's happening here? Yesterday, you closed at 104. Right now, you're at 118. A lot of strength. Now, could you come down a little bit? Possibly. But I'm going to tell you right now, this keeps snowballing. And you're seeing the same story happening. Again, I want to say, I can only say it so many times. The weakness in the market right now is revolving around banks. And I believe there's a lot of issues. Fundamentally with the banks. Okay. I think there's a lot that we're trying to sweep under the rug as well. But we have to be able to react to the market. On Twitter, I posted something. This is the earnings. If you want to see, I'll have this retweeted on Twitter so you can see it. I'll actually retweet it right now. But I want to share y'all a tweet that I posted a little bit earlier. Okay. And I try to say this as much as possible. Okay. Day trading is not swing trading. If you're day trading, all you care about is what happens today. In the between the 8:30 market open and 3 o'clock market close. That is all you care about that day. You aren't caring about what's happening next week. You're not caring about what happened necessarily yesterday. You care about the price action right in front of you. Okay? You're worried about right then and there. I'm bearish on the fundamentals, banks, and I'll go into that a little bit more. But we didn't short at all today. Why? Because we never got below 1295 or 4100 on ES. Therefore, we are bullish from a technical viewpoint. So I always have to be able to disconnect fundamentals and technicals, okay? Especially if it's on a short-term basis. If I'm trying to make my bread and butter throughout the day, I am not saying, okay, well, hypothetically, we have that, next week's FOMC, they're going to be raising rates. So I need to play today based on next Wednesday. No, I have to play it on what's being given to me and the overall strength of the market. And from the get-go this morning, what happened? What happened from market open on NQ? NQ specifically overnight. I mean, you opened up right. We'll go back to 8:30 a.m. real quick. You're at 13. I mean, you opened at the day at roughly 13,000, mounting 13,000. 1295 is down here. Okay. So all throughout midnight, middle of the night, you were above this key level. Going into ES, where were you here? ES looked a little bit worse, I will say. But at market open, you were below that. You sat there for a second, and then you mounted it. The second you mount this, you push, mount, push up. No opportunity to go short. Not one time throughout the day. So I want to highlight that and say that. Where do I look to go short? Where have I traded the short? If you're in Discord, I would love for you to comment down below so they can know I'm not BSing anybody. But you're not looking to go short above 4,100. Why? Because if we look back so far over the past month, give or take, every time you're above this level, you're getting nothing but love, nothing but buyers. You can go and look at this level and how you've reacted to it. Okay? Understand 1, 2, 3, almost 4, 5, and then now 6 above it, right? The reactions have all been very strong except the one that we had right here. So we have to understand your risk to reward and the opportunity there. Again, if tomorrow we come out below this level, I would look to go short. If we came out below 4,100, I would be bearish. And fundamentally, nothing has changed. But from a fundamental standpoint, let's talk about a few things. Now we have PCE coming up. We know that's important. I've been saying that. But going a little bit deeper, FRC, what's happening? Now, there's a lot of speculation. Fox reported this as well. It's not just Tyler saying this. Don't attack me. That there's a high possibility FRC gets seized tomorrow, which is Friday. Now, if there's ever a day during the week that you're going to get seized by the government, they want to do it near the end of the week, specifically Friday. Why? Because you want to have time for the market to settle. You don't want the market to be reacting. Look at the last bank crisis we had going back into March. And it's crazy saying the last one because it's really still the same one. But if we look at that, what happened, right? If we really look at where all that started to happen on the market, you go back and you look, you had that downside here going, March 9th, March 10th, the 13th, 14th, you had more of that stuff happening. And then after the weekend shows up, you have a little bit of a bottom, the 17th, and then you start pushing back up and you establish that low there. So understand that. They don't want the markets to go crazy. Now, am I saying tomorrow it has to get seized? No, I'm not saying that. But it's something you need to be looking out for, especially with PCE as well. We've had a really nice push, a really nice volatile move over the past few days. I just don't want people to get caught, especially while we're at the top of this range on specifically the Nasdaq. ES is pushing back up here. ES 4200 is the level you need to break to be really bullish. Nasdaq, you need to break and hold above 13.3. But ultimately, you're back at these highs, okay? And in my opinion, if PCE comes out good, you have almost every reason for continuation to the upside. Unlikely you slow down if PCE comes out halfway decent, okay? Because what's going to happen next week with the rate hike is you're going to get that 0.25. I'm almost positive a 0.25 is coming. They're not going to pause because of banks or anything like that. And then after that, they're going to signal, in my opinion, a pause going into July. That's my opinion. That's what I've been looking for since the November. And I think it's playing out as we speak. But if PCE and inflation data comes out bad, they're going to have a not so good tone. That's something you have to be visualizing and looking at and paying attention to. So these are the things we're looking at right now. Again, I have to give you a viewpoint of going into next week, but I also need to give you a viewpoint of going in tomorrow. So as we look at this, what are we doing? You're not necessarily looking to go heavy into calls here. I'm telling you right now, you're at 13.3. I'm not a huge fan of going short though, because you're obviously not below 12.95. You're in the range again. So if you come out with any weakness, 13.2 has to be on the top of your watch list, and then 13.108. But what I'm going to tell you right now is you're at this game of a breakout is almost imminent, especially with what's happened with these earnings. We also have VIX getting crushed. You have that wedge being established, but VIX is just straight back in the gutter at $17. And again, everyone's saying, well, Tyler, doesn't VIX has been bouncing from this? And I agree. VIX has been bouncing from this region for almost a year and a half. But you need to identify, where did we trend all throughout 2020 and 2021? You basically trended lower. You came down into 14.15, and that was the time to buy. Previously, 2019, you trended at $12. So you need to understand that you don't have to just sit in this area. And you really shouldn't be charting the VIX based on a wedge or these regular formations. The VIX is not a stock. It's not a ticker. It's not playing the same way as these other names. It's based on derivatives in the S&P. It's not based on the actual value. You need to understand that as well. So it's a total different game. So when you're trying to do this like you're charting an equity, it makes no sense and you're kind of just playing yourself. So again, things you need to be visualizing. Also, today, a few other things looking at what's happening with the bonds market. Again, as we look at this time frame as well, you have to look at the higher time frames on bonds. So far, you're still holding below the 200 SMA on the daily for the some of these bonds as well. We're going to start with the lower, but it looks like you're trying to just flag towards that downside. Like bonds want to continue their descent. Okay, that's what it looks like right now. You did get a strong weekly candle on these, signaling some upside. But what I will say, going into the interest rate decision next week, especially with PCE, I could see bonds slowly dropping down. Just going to say it, especially as you're getting closer and closer to this idea of a pause, right? And if they come out with a soft tone during this next FOMC, it's going to be pretty brutal for bonds, in my opinion, at least until inflation data spikes once again, which I do believe it will. But you need to understand right now, it's going to take some time. So that's what I'm looking at there. Again, what are we looking for downside? Below 4,100, right? So far right now, it's all traps on shorts. That's why yesterday, and go watch the video, what did I say? I had to start trimming my position going into close because nothing's been safe with these earnings. You can't predict what's going to happen with these. Amazon, if anything had downside opportunity, I thought it was Amazon just based on inflation numbers and what was happening. But Amazon just keeps churning it out. Congratulations, they're all killing it. I feel like Apple has some downside, but who knows based on these earnings. And then right now, there's no reason to bet against tech earnings because so far, everything is beat. All the big names continue to smash. And as of right now, you have to look at it from a viewpoint of if you're expecting to go into a recession and inflation so high, these companies, specifically the tech ones, have no signs of slowing down, right? So they're still performing not at peak levels, but still very good, despite it being a terrible market for them. It just creates a great opportunity, and it just says this is solid investing. That's why you see names such as PayPal, for instance, right? It's still a big name, don't get me wrong, but it's all the way down here in the trenches, right? Nowhere near its, all-time highs. But we go into something like Microsoft, who's still innovating, who's still getting bigger, who's still challenging the market, diversifying, and they're going up. Look at NVIDIA, a leader in the space in semiconductors, still going up. Killing it. You go into something like Amazon, right? You are pretty low. And I told you yesterday, I was like, Amazon and Google, probably your best bang for your buck. You don't want to short these just because they're so cheap. But they're still churning up from lows, right? They're not trending at the lows right now. They're making higher lows and pushing up since essentially January, right? Meta, big concerns, but guess what? They pivoted. They started focusing on WhatsApp, what they're going to do with payments and transfers, right? Moving up, right? So that's the difference here. When you look at these numbers and you look at these reports, they're giving investors hope down the line. And they're not only giving you hope, but they're saying that they can survive during this type of market as well. And so that's what I'm looking at. That's my area for caution. Again, where would I look to go short? Back below 4,100. Where would I look to go long? If you get above 4,200 on ES, you're extremely, extremely bullish. That probably won't happen though until the FOMC meeting. So until then, you're trying to scalp, you're trying to be patient. After the FOMC meeting, if you get above 4,200, you're looking to swing. You have a lot of opportunity. It could be a beautiful, beautiful summer, especially if they start signaling towards a, pause. That could be very beneficial going to and the whole, sell in May and go away. That will not be the story if they start signaling towards a pause. Okay, so that's what we're looking at right now. You want to stay towards SPY and some of these other names that are getting heavily affected by banks. Tech names, I'd be very, very careful. Again, you can say you're getting hit on them all day long, but no matter what, when you look at Qs, you look at Nasdaq, you just keep coming back. It's absolutely incredible. The one thing I will leave with you though, I am watching is Tesla. Tesla today, you did print an engulfing candle on the daily time frame. It's beautiful. I bought a little bit here in the after hours on stock. I still like the upside opportunity. If we continue this, if we get decent PCE, if we go into next week, there's a lot of ifs. I think Tesla will start running back towards 190, 200. I think it's a great name personally. It's top of my watch list. You got to be watching it. Again, I love value, and I think you're probably getting some value down here. Again, if you start making a lower low, you start pushing back down, you start seeing weakness on NQ and SPY. Again, of course, I think you're going to fill the gap. But right now, where we're at, it's looking like you could see a lot of traps across the board in the entire market. So be careful, be safe. I'll see you tomorrow.